Nupur, for giving us a heads up. I'm glad, between between the third wave and the second wave, at least I went and visited the cinema halls. But let's take that point forward. Abneesh joins us now to give us his take. Hi, Abneesh. What's your take on these PVR, the Inox leaders? They were a bit of an unlocked trade, but, it's still plenty of uncertainty out there. How would you approach these stocks?
Yeah, thanks. So we are very positive on both PVR and Inox. So what is different this time in wave 3 of COVID is state governments have not gone and rushed to close the screens. If you see in most of the states have not closed the multiplex screens this time. So we have not seen a strict lockdown. This is very good because one, if you see the Mumbai data, Delhi data for Omicron, for the COVID cases and South Africa, the cases come down very quickly. In wave 1 and wave 2, what we saw, once the screens get closed, opening them takes a lot of time, so much uncertainty. This time, larger states have not at all closed. Only we have heard Delhi and Haryana close. And we do expect that this time the screen openings and the movie openings will be much faster. In Q3, when the quarter started, I don't think anyone expected that the ticket prices and the spends per head, essentially F&B per head, will be beyond pre-COVID level. You will see the results of PVR and Inox coming tomorrow. We do expect Street to be positively surprised on the EBITDA and revenue also. We expect very strong EBITDA number by both PVR and Inox. And on the revenue front also, we expect a beat. So we have currently 290 crore of revenue for Inox and around 500 crore revenue for PVR. But we do expect a beat there. So what's happening here is the pent-up demand again will come. The content is very strong. OTT and screens will both coexist. But I don't think many large, big movies will go towards the OTT platform. And consumers clearly are not going towards foreign vacations, etc. They are not willing to travel to long distances, which requires air travel. So I think the movies will come back again very strongly. So we are very positive on PVR and Inox. Yes, from the peak level, which was seen, say, 1.5 months back, because of Omicron, the stocks had cooled off. But in the last 3 weeks, again, because of the data of COVID, which has come in Mumbai, Delhi, etc., sharp fall, stocks have come back.
Yeah. Okay, absolutely. I mean, I, for one, am really looking forward to when things open up in a big way and you can just go and feel normal, right? Sit in a theater, have your popcorn, watch that movie, something that you haven't been able to do for 3 years. All right, let's talk about Zee Entertainment because, there's so much happening there. Of course, that merger with Sony. But apart from that, Zee is now looking to spend, over 1,000 crores on these movie releases as well as part of Zee Studios. I read it in a report. What all is happening there, and this quarter particularly, what is your expectation from Zee?
Yeah, coming first to this quarter, it's a very, very high base. They have a 33% sales growth in the base quarter because of one-off revenue items. So obviously that will not recur. So this quarter, we do expect that for Zee, there should be almost 20% fall in revenue and almost 40% fall in EBITDA on a YOY basis. X of the one-off, it will be a more reasonable number. On a 2-year basis, we do expect still a good growth for Zee. Even on quarter, Zee should see around 8% growth in revenue. So this quarter, base effect is an issue. Company continues to invest in the business because of market share loss in Zee TV, the Hindi, and the OTT, they continue to invest. Coming to a question on the 1,000 crore investment in movie production. So this again ties up with what we discussed on PVR Inox. If PVR Inox are seeing such good numbers, it makes again a lot of sense for content creators to invest behind movies. Zee obviously has the multiple channels across languages to harness that, plus OTT. Plus always they do a mix of high budget and mostly mid-budget kind of movies. And it makes a lot of sense. We do see a lot of space for Zee kind of player. And once the Zee-Sony merger happens, I think further focus will increase here. Multiple languages, there is huge opportunity available. Now, 1,000 crores don't go just by the headline number because it also depends upon the COVID waves going ahead. So you should see in that context. But yes, it makes a lot of sense for Zee to ramp up there because this is how you'll get viewership market share. Plus on OTT, clearly you get a lot of footfalls because of the movie releases.
Very quickly, Abneesh, your take on Sun TV. What's the official rating you have?
Yeah, Sun TV will be lowest in pecking order versus PVR, Inox, and Z. Yeah, we have a buy, but that's largely because of valuation comfort. So what Sun TV essentially needs to do is ramp up on OTT. If you see Star, Z, Sony, etc., very aggressive on OTT. In fact, Sun had delayed its plan for fresh content on OTT and prioritized movies for H2 because of the wave 3 of COVID that is getting delayed. I don't think that's how Sun should do. Both are important. OTT is important. Movies are important. But OTT is the way forward, right? So Sun TV is lagging there versus most of its peers. Plus market share loss in some of the states remains an issue. But yes, IPL and the valuation comfort, those are the key things which work for Sun TV. But Sun TV will be lower in pecking order versus Z for us.
All right. Abneesh, thank you very much for that. So that's essentially a quick check as far as the media space is concerned ahead of numbers. We'll take a very quick break. There's 10 minutes to go for the pre-open session. Mitesh Thakkar and Sudarshan Sokani will be with us with some trading ideas on the other side.